Happy Monday, everybody. Sorry to say the weekend's over, but we're off to another great week. All about shopping this week. More on that in just a moment. Today is August 14th, 2023, and this is your long-awaited Monday Market Update. As we do here every week, let's review last week's market action day by day and then preview what we'll see this week. Let's start with the topic I like to hit on often, work from home. For the ultimate in irony, Zoom just told their employees that they should return to work in the office. Some details to follow with that, but there you go. As always, I read research on both sides. Wall Street execs, 2/3 of them said if they would quit their jobs if they had to go back to the offices 5 days a week. Survey, not so sure I buy that one. MIT and UCLA, productivity fell by 18% for the work from home crowd, and the study claimed that those workers at home are 27% less productive at home than they are in the office. Like I said, you got both sides of it. As we get going into the new week, let's catch up on where we are in the earnings parade. Almost at the end, over 85% of the S&P 500 companies have reported. We'll talk about what's left this week, some big and important names, but going into the week, things are looking good enough to support what moves we've seen, but not good enough to be the catalyst that I've mentioned that we'll need to move significantly higher, in my opinion. The bar was set pretty low, but 80% of the companies beat earnings estimates. 64% beat revenue estimates. Overall earnings Overall earnings per share growth, negative 5.6%. But remember, as I've been telling you, most of that is accounted for by the energy companies. Remember that sector that behaved so well last week. Let's get back to the day by day. Monday saw stocks gap higher at the open as the market got in the mood by shrugging off Fed head Bowman talk about the need to raise rates further. Did stick to the used car price inflation rate declining. Yes, very careful on how I said that. Just a reminder, used car prices have dropped 11% since last year. Definite positive, but the index was at 155, 160 in early 2020. Today, it is all down all the way to 212, still 35% higher. So disinflation maybe, but still higher. Market sloshed around a little bit, caught some buying at the end of the day. Dow was up a bit over 1%, S&P up just under 1%, and the NASDAQ was up about 0.5%. On another note, the yen carry trade. This is something I want to just mention real quick. What is this and why do I mention it? Just one other risk to keep in mind. The market hiccuped last week when the Bank of Japan said that they'd let rates rise about over the 0.5% level. Why is that? The yen carry. This is one that goes back to the mid-2000s, and this is summed up like this. Back then, the Bank of Japan kept rates at 0. U.S. rates were about 0.75%. That spread went from 70 to 75 basis points to 400 basis points now. So what was happening was traders were borrowing yen at 0, converting them to dollars, and either capturing the spread or leveraging up with risk. As Japanese rates are allowed to climb, that easy money may be done. If that is unwound, this can see some selling come in based on nothing but the carry trade unwinding. Just something else to keep an eye on, and I'll watch that for you. We saw everyone shift to the other side of the boat on Tuesday as markets gapped lower with negative eco data from China, soft earnings, and the big one as Moody's downgraded 10 smaller banks and warnings were flying all about all the financials. Again, Fed heads Harker and Barkin doubled down again on the higher for longer idea and pile on the credit card debt in the U.S. Passing $1 trillion, a new record 1.03 trillion, up over 16% from a year ago, the highest annual growth rate since 2001. The average rate on that 20+%, and in the student loan payments coming back online, as I've told you, you see where the concern is. Overall, with all that, pretty tame. The Dow and S&P were both down about 0.5%, the NASDAQ down about 0.75%. Middle of the road on Wednesday when markets opened slightly higher. CPI and PPI out of China was deflationary, not much else, and then nothing at all. We had 3 to 5% of the values of the mega techs disappear. Meta down more than 3%, Nvidia down 5%. More selling as the day ended, and the S&P ended the day at 1 month low. Dow down 0.5%, S&P down 0.75%, and the NASDAQ was down a bit over 1%. Look at what is back, volatility, and no, this does not mean you should panic and run for the hills. Maybe understand it, that it will happen, and as I've been telling you, take advantage of the opportunities when they present themselves. Thursday, and markets were all over. CPI numbers were much better than feared, and the markets liked it. S&P spiked to fresh highs. Then the bloom came off the rose. Markets liked the number, but the 10-year yield and the 30-year auction, they brought back to light that the numbers, while good, are still about double what the Fed is shooting for. Car prices, as we said, were down, but we're still higher on food, energy, insurance, travel, housing, still higher and on the rise. $5,600 for an apartment in New York City. Really? By the end of the day, a sleeper. The Dow was up slightly, S&P barely in the green, and the NASDAQ too, slightly ahead of the flat line. Friday had stocks open slightly lower, and with a bit of bouncing around and the PPI number disappointing, the Dow was up 1/3 of 1%, S&P down just slightly, and the NASDAQ down about 1/2 of 1%. For the week, the Dow was up 1/2 of 1%, the S&P down 1/3 of 1%, and the NASDAQ down almost 2%. We did get a strong oil move despite concerns about eco data in China. The dollar also had a strong week. Let's look into this week. As I mentioned from the start, shopping will be on our minds. Retail. This week is all about retail. Tuesday will bring the retail sales report. And this is so key, as I've been telling you. Now with over $1 trillion in credit card debt and student loan payments about to come online, what will happen to the consumer? 70% of the economy is consumer driven. Minimal Fed heads. Kashkari on Tuesday is the only one I was able to find, but we'll get Fed minutes on Wednesday. We'll see if that gets any attention. It tends to get attention these days. The real spotlight should stay on retail. Walmart, Target, and even Home Depot all this week. We'll have to see if they give guidance like UPS or like some of the others. Okay, that's the week in review and the week in preview. I mentioned on Friday about the new online access you have available to your accounts and the upgrades that are coming. So please be in touch with us to make sure that we have your email address and your phone numbers correct. There's a lot you can see. You can start on my website, www.randycohenihtwm.com, and go from there. Videos, blogs, research, and access to your online account, access to. Call Rebecca if you need some help with your online access or to update your information. Come back on Friday for the latest in the Friday planning video. Until then, stay in touch and have a great week.